I remember that this isn't all about me, that I'm building data centers, infrastructure, projects in communities that, if done well, are going to outlive me and they're going to have impacts far beyond my lifetime. So I just remember that there's people that will be affected by my choices that I will never know.
Welcome to the Build to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. We believe the key to scaling and compounding your wealth in life starts every single day with the mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to help you scale and compound your wealth in life so you can give more all of it away to help MVPs, the most vulnerable people. My name is Brett Swartz, and I'm excited to bring another amazing guest. We always bring in entrepreneurs, millionaires, and billionaires to share with us their secrets, ideas, so we can compound and make a huge impact in the world. And I'm excited about our next guest. And he is out of the great state of Oregon, in fact, in the Bend, Oregon area. And he is a guide into the world of Bitcoin and Bitcoin mining. And his journey began as a graduate from Southern Methodist University with a degree in engineering management and information systems, and then entering the cryptocurrency industry in 2015. He was captivated by Bitcoin and Ethereum and soon found himself viewing the cryptocurrency industry as a massive opportunity to seize. And he's built a business that's going to help us to figure out ways to build wealth within Bitcoin mining without any operations. We can earn Bitcoin while we sleep. Let's figure this out together. Please welcome to the show with me, Mr. Beau Turner. Beau, how are we doing?
Thanks so much for having me, Brett. Appreciate the introduction. It's really great to be here.
Great, excellent. Yeah, for our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
So originally grew up in Alabama, moved over to Texas to get some schooling, spent my early career in real estate with an engineering background, decided that working for somebody else was not a good fit for my personality. And I, like probably many of your guests and people listening to the show, had a distinct interest in building wealth and definitely have aspirations to be a billionaire one of these days. And real estate seemed like the most tried and true way. And then 2020 changed a lot about the world, a lot about the way that I saw the investing world. And Bitcoin came back onto the scene as something that I should consider seriously. And I saw mining as the most likely candidate to build cash flow in the Bitcoin space. It looked like the most similar thing to what I was familiar with in real estate. And I had enough data center coursework when I was in school to feel comfortable with it, comfortable with the investment, but really was just looking for something passive. And unfortunately got very badly burned by another operator in the space. My wife and I had just gotten engaged, put about $500,000 into owning some of these servers and sending them somewhere else. That did not turn out well. Unfortunately, we didn't have any control over it, and it was just a bad scene. So pretty much a total loss event. And after that, we decided, well, the opportunity is here. It's just the people that unfortunately seem to mess it up for the ones who are looking for these returns. And so we built our own facility here in Oregon. And now we're up to 5, working on number 6, and helping hundreds of people get started into Bitcoin mining and get that passive Bitcoin income, all the depreciation benefits of owning equipment, and a really cool business to be involved in.
Amazing. I can't wait to dive in and pile away. People want to learn more about Beau Turner. You go to abundantminds.com, abundantminds.com, mine Bitcoin without managing operations. If you want to figure out who Beau is, make sure you spell his name correctly, B-E-A-U, for the first name. Turner is spelled just like you would think it'd be spelled. Okay, great. So let's dive right into this. What's the number one secret when it comes to mining Bitcoin and earning Bitcoin while you sleep?
Well, I don't think it's a secret so much as just a really important aspect is getting your energy right. So many people get into this, they think they can mine at home, they can mine in some spare space in their warehouse. You just buy some computers, hook them up somewhere, and it's going to work out, right? The reality is it takes so much in terms of infrastructure, energy procurement, operations. I mean, these are data centers, even though people set them up in the equivalent of chicken shacks all over the world. When they're run well, they are actually data centers. And so making sure that you've got the right energy sources, the right kind of redundancy, networking is super key to this. And I think messes a lot of people up when they just get in casually or try to get in on their own without asking an expert before they dive right in.
Okay, I'm sure Bend, Oregon helps with that, with the climate and the weather. Talk about the importance of getting energy right within the, and I'm assuming it's all within the Bend, Oregon space.
So actually, we have sites all across Oregon. All
Okay.
5 of them are located in different areas across the state, but our
Okay.
favorite part of the state is along the Columbia River. And that's
Okay.
because it's a very abundant hydropower source. The climate is usually very favorable there. It's very clean air. It's very mild climate all year round. These
Hmm.
machines, they're definitely more hardy than most computers, but they still are subject to environmental conditions. And so if you can have a really stable temperature all year round and not expose them to too much heat cycling, like many miners exist in Texas and across the Southeast, while you might be able to get really good energy deals, unfortunately, usually the climate is not so friendly, and you will
Hmm.
spend a lot of time and a lot of extra maintenance costs making sure that those things run. So we
Okay.
love Oregon for that reason.
Okay, I spent some good time in Bend, Oregon, and then Grants Pass, and Medford, and Ashland, and Klamath Falls, and it's such a beautiful, beautiful state. Portland, Tualatin, that area, and such. So fantastic. So all right, okay, that's the number one secret: getting your energy right. Okay, what's the number two secret or foundational thing that you'd like to share with us to mine Bitcoin efficiently?
Number two, I would put in what we just described is your climate, the way that you manage temperatures. So many people, especially people that look at doing this at their home or in their office, think, I'm just going to run one of these computers and it'll be great. And the reality is if you don't have great airflow, temperature control, and a good climate to support it, your machine is probably going to be down and breaking more often than not. And unless you've got really great ventilation, it's probably also going to cause quite a headache for the people around you who don't like to be hot and hear the equivalent of a jet engine running in your spare room. So when people are looking at setting up, especially if they've got extra warehouse space or, setting something up in their office, other than not having the right electricity resource, the right infrastructure, the second biggest problem that we see is not controlling the climate properly. And so being in Oregon helps us really control for that without having to expend too much extra effort, have to expend too much energy on actually cooling these things, and keeps you stable year round. So that would be number
Perfect.
two pitfall and secret that people would often fall into.
Excellent. Let's just roll into number three. What's number three?
Whew. Number three is who are you working with? And this honestly could be number one. It was the number one thing that messed me up when I was first getting in, was picking the wrong person to partner with. And this is true in all of life and business, that you can have the best deal, you can have the best opportunity, and if you do it with the wrong person, it's going to be a nightmare and it's not going to work. So you can have a great energy source, you can have a great climate, and if you don't have the right people managing operations, the right partners who are keeping your investment safe, you're going to have a bad time. Enough said.
Okay, excellent. So now let's get into, by the way, if you want to learn more, you go to abundantminds.com, abundantminds.com. Let's get it from the, breaking it down on how it works to work with you guys. And it says, get started with as little as $10,000, including hardware in the first year, electricity. All right. So let's push this up to $1 million. So someone says, like, I got $1 million, but I've been wanting to get into Bitcoin. And I know, like, and trust you guys. You guys got the Oregon climate. You guys got the team. All these things. So they're like, this is cool. I believe in Bitcoin. So I got $1 million, right? So how does it work? First of all, they need to be accredited investors. Two, what's kind of the process? Walk us through this a little bit, and then we'll get into like returns and all that kind of thing.
Yeah, so at a very high level, you're essentially just buying a machine, buying a server. That server lives in one of our data centers and is fully managed for you. You own the server, so you get to keep the depreciation benefits, any operating offsets. And because you're just buying equipment and then having someone manage it, it's not anything you have to be an accredited investor for. It truly is just a managed service provider relationship. So because of that, people on the back end have all sorts of different ways that they integrate it into their business, their investment style. You might have it in a sole prop, you might have it in a partnership or a GP/LP structure. People do all sorts of creative things on the back end when structuring the deal, but it's very plug and play with our model because all that we're doing is managing those computers and making sure that you get the right ones for your purpose.
Okay, that's cool. So no accreditation required. You can do it through, you can do it through partnership LLCs, different people can come together. So again, let's just do it simple though. Let's say someone has $1 million, they put it into an LLC, they're like, Beau, go, right? What does it look like? How much depreciation do you think that will produce on average? We do have the bonus 100% coming back or back now. Walk us through that, and then just some of the average returns over the last, you can do the last 3 years and maybe some potential in the future.
Yeah, for sure. So I'm going to use easy numbers. They're going to be a little bit off, but let's say you've got $1 million. That's about 100 of the highest efficiency units. Really, probably 130 to 150, depending on pricing, because these things do change in price based on Bitcoin, based on the mining market. But let's say you're getting 100 of these units. So at $10,000 a pop, one of those units is going to produce about $500 top line in Bitcoin. So you're actually earning real Bitcoin. It's not converted to dollars. You get to choose what you do with that coin. The operating expense for one of those units is about $225.
Sorry, per what? Per month? Per what?
Yeah, operating expense, okay. $225 a month, top line revenue, $500 per month. So you got about 50% margins on what you're spending. Let's say you've got those 100 units. That means you've got a monthly bill around 22,500 and then a monthly income of about 50,000. So you're clearing about 25K a month on this example $1 million portfolio. If you've got 150 units for that same million instead of 100, then closer to 40 in terms of your net income rather than 25.
Okay, we'll start with 25 to 40 times 12. So it's about 300,000 on the low end. Let's call it the NOI or net profits after all expenses, right? And then on the higher end, you said 40,000 a month, and then that's around 480, right? 480. So I'm going to split the difference there. 480 minus 300,000 is going to be or 480. I'm sorry, plus 300,000. And that's going to give me 780. I'm going to divide that by 2 is about 390. So if I take 390 and I divide that by 1 million there, and I'm using my HP 12C for those who are wondering out there. I highly recommend this calculator. So I'm looking at, is that 39% return? Is that what I'm looking at, Beau?
Yep. You typically, in a pretty modest Bitcoin market, you're looking at a 2 to 3 year break even.
Okay. All right. Okay. And then, so pause there for a second. And that first year, given the tax law as you know it now, with the bonus depreciation, how much tax or depreciation do I get to take in that year?
Yeah. So with 100% bonus depreciation, you've got 100% of that upfront cost. So that $1 million in miners, that's 100% write-off all the way through. And then you've also got the operating expenses. So many people will choose to pay operating expenses monthly, but you can also prepay them. IRS usually will let you do up to 12 months of prepayment of operating expenses. Let's say you're coming to the end of the year. You want to go ahead and prepay that next year, bump your deduction up from $1 million to maybe right around 1.3 if you're prepaying 12 months of those 100 machines.
Interesting. Okay. So first of all, the $1 million 100% write-off. So if I made, for example, 390,000 net profit, I have at least $1 million that first year. So that washes it out. Is that how you understand that?
Exactly.
Okay. And then so now I've got about 610 moving forward, right, to the next year. So that wipes out that other 390,000. So at least let's call it a 2.5 year run rate of like next to no tax. Is that a fair summary on that first million?
That is a fair summary. And what you see often people do is once they get those first couple of years under their belt, they see it, they get trust with the industry, with the operator, you can actually collateralize your Bitcoin, borrow against it, and not have any cash out of pocket to recycle into more machines. And of course, any leverage is an additional risk, so don't take that as financial advice, but it's something we see people do often, especially at scale with something like Bitcoin that you can borrow against.
Okay, so it's clarifying. So on that 390, that would be you mine it and then you sell it and you take it, right? So versus just keeping it in there and not selling it, or like how and I know you're not part of CPA, probably tax legal advice, but how do they see that if I don't sell the 390 value and take it in cash, is it still like in a deferred state anyways? And that's what you're saying, and then you can just borrow against it. So you're actually not ever receiving it in the given year?
So mining, this actually gets into an important point around mining. It's still treated in this kind of archaic way tax-wise, where when you mine your coins, you take possession of them. It's treated
Mm-hmm.
as ordinary income. And then you get capital gains tax whenever you sell them. That kind of treatment doesn't apply to someone who's, for example, mining gold. You treat that as income when you sell it on the market, not when you pull it out of the ground. So that's
Interesting.
one of the things that we're looking at getting fixed. I'll be in DC later this month talking with
Oh,
policymakers about it. So that's one of those
oh,
kind
that's
of
exciting,
easy,
Beau. Way to
low-hanging
go.
fruit.
Way to
We
go.
got to
This is great.
do what we can. We want America to be the Bitcoin capital of the world, and tax law is part of it.
Okay, so make sure everyone captured that. I'm gonna make sure I captured it as well. So again, I make 390. I mine it, and even if I don't sell it, it's still deemed as if I earned it, right? Because it's still
Right.
Bitcoin, not gold. If I do sell it, it'd be cap gains tax. But even on that 390, if I didn't have or didn't take that depreciation write off, it's as if I made 390,000 in ordinary income.
Exactly.
Okay. Okay. All right. Let's keep
This
in
is
mind about. Yeah.
It's
Keep going.
truly like you're running an active business that's managed
Yeah.
for you.
Got it. Okay, everybody, taking action today. If you'd like to, you can go to abundantminds.com, abundantminds.com. They will help you purchase your miners. They will manage everything, and then you can earn Bitcoin effortlessly, and then you can reinvest or cash out. Let's dive back into the cash out refi scenario, or I'm sorry, the refi. Yeah, getting cash out by refining it. And so let's say I earn 390 in 1 year. Let's say I do 50% LTV or LT, loan to value, right?
Yep.
What kind of interest rate are you seeing on that generally in this environment? Are there fees to do that? Is there a go-to provider that you think is a good fit for helping people with that? Walk us through just a little bit of that scenario.
Yeah. So in the Bitcoin space, there's quite a few providers that will take Bitcoin as collateral on one of these commercial loans. And usually they are on the higher end of the rate spectrum. They can run anywhere from 9 up to even 14 or 15% annually. They're usually interest only. So that can help a little bit if you're just deferring that all in or that total repayment. I personally have only used Unchained for Bitcoin collateralized loans. That's on the higher end, but they're also one of the safest providers. They've been around the longest. I always encourage people, even if you're going to get a low rate, don't take any undue risk with your Bitcoin. It's been the best performing asset of the last 15 years. The last thing that you want to do is risk it on something that's going to save you a couple percentage points. So that is not a plug for Unchained, just saying be careful in general. But yeah, we do see people, especially if they're going for that kind of recycling of the same capital, looking to get more depreciation benefits by leveraging their Bitcoin and then buying more machines. You can effectively, without taking cash out of your pocket, actually keep recycling those depreciation benefits by re-upping your fleet, reinvesting, continuing to get the most efficient machines. And at some point, at a certain critical mass, it just builds on itself. It snowballs.
Okay, so let's build this right now. Actually, before we build it, we're gonna go through if we're gonna do some scenarios about this. Is gonna be fun, everybody. But before we do that, though, okay, I want to mention something, right? You talked about the purpose of the cash out refi or borrowing against your Bitcoin is so that you don't have to incur the capital gains tax upon the sale of the Bitcoin. Correct, Beau?
It's also so that you don't sell your Bitcoin. That's the biggest regret of people who started mining early is we've got a tech on our team who was one of the first people who started working with me. He was mining in 2012. He spent, at the time, a couple $1,000 on an electric bill, but he paid it in Bitcoin. He sold some of his Bitcoin to pay it. And that was over 100 Bitcoin for those electric bills. So a couple $1,000 was really a 10 million plus opportunity cost. You don't want to be doing that. So
Okay.
the goal here is don't sell your Bitcoin to pay for electricity if you can avoid it. And that is what we see people have the most success with over the long run is accumulation.
Okay. So, right. Okay. So I'm going to give you another story and an actual client and tell me what you think about this. Right. And I'm going to try to create a picture of the best of both worlds. Our company, you may or may not know this, is called Capital Gains Tax Solutions. And in fact, we're the first to help a Bitcoin, let's call it never seller, sell their Bitcoin and maximize timing. Okay, I'll walk you through how this worked. In fact, she worked for Google, and she was in California. And her biggest thing is she didn't want to move to Puerto Rico, and she also was a never seller. Okay, and so she bought a number of Bitcoin for about $50,000. Okay, well that value of that 50 went to 50 million. All right. And so she sits down and says, Brett, here's the thing. Like, I think we're at and this is a couple of years back. So this is maybe about 3 years ago when it peaked out at about 69,000. She goes, okay, at 54,000 a coin, I want to exit 5 of the 50 million and defer the tax and use it for a specific investment into, it was a tech company, startup company. Okay. So she had a place to go with it, but she didn't want to incur this tax of about 1.85 million in capital gains tax. And so 54,000 a coin hits, we execute on it, right? In fact, then it goes to 60, 65, 68, 69, right? She keeps the rest of it in there. Well, we know what happened. The market, tanked to 15,000 a coin, right? Now, I call it a steel spine, right? She had a steel spine on her way up from 50,000 to 50 million. Right. She had a steel spine when her 45 at this point, after she exited 5 into our strategy, deferred the tax, went to maybe about 70 million. And then it goes all the way back down. But the point of this is, hey, she didn't sell. And then, it's over 24,000, I think a couple of weeks ago. Maybe I think we're hovering around 111, 115 today. I'm not sure. You probably know that one number better than me. But the point is, sell high, buy low. Okay. Tax deferred. Right. Now, had she borrowed against that, 5 million, right? And then boom, this is the piece here where I think there's prudence. I get the never sell, but guess what? I can sell my Bitcoin, defer my tax, and I can literally put it back into Bitcoin dollar cost averaging as the market shifts within our strategy. Now, her particular one, she did it for a startup company for a business. So we call it, tax flow mindset versus just cash flow mindset. And she was a never seller until she met us. And so I think there's two sides to this. And I wish that all Bitcoiners knew this, because I feel like they think it's a rock and a hard place. Like, never sell so I don't have to feel this regret, or sell and pay all this massive capital gains tax, or move to Puerto Rico. And I'm saying, guys, there's another creative way here. There's a fourth option. And it's actually sell and to take advantage of these wild swings between, let's call it 80 and 100. We went back and forth on that. I feel like for 6 months, every month it was 80, then it was 100, 80, then it was 100. And now we're at, 120 and then back to 100. And there's kind of these swings, and you can kind of game the system with our system. But you're an expert in Bitcoin. I mean, when you hear that, what comes to mind?
One, I love that you've got a solution that helps people who want to keep their Bitcoin and want to keep exposure, not get turned upside down because they take undue risk. And I, almost wish that I hadn't even brought up taking leverage, because that's going to sink in the minds of some people more than I want it to. It's just like, it's like any tool, it can hurt you or it can help you depending on how you use it. And I totally agree with you. I mean, the worst thing that you can do is have the optimal return, the optimal financial allocation, and be miserable or scared or over leveraged or feeling like you're at risk of losing something. So anytime I think of taking on leverage, I'm looking at very, very low LTVs, something that you can very comfortably weather really strong drawdowns in. But even then, I mean, the safest position, like you mentioned, is just being balanced, finding a middle way that maybe most people don't think about. And that's part of why I love the mining space, is like all of this price anxiety of like, is it 120 today? Is it 80 today? Is it 50 today? Yeah. I got into mining to avoid that psychologically. I'm not a good trader. I'm not someone who likes weathering huge price moves. It's part of why I enjoyed real estate. It's part of why I enjoy cash flow producing assets, is because it takes that psychological turmoil of watching asset values go up and down out when you are getting cash flow. And in mining specifically, I want to have as much Bitcoin as possible over the long run. And the strategy to achieve that in my world is just keep accumulating. And if I'm mining, then I'm literally dollar cost averaging at a discount every day. I don't turn my buys off. They're just running all the time. And whether Bitcoin is 70K or 90K or 120K, right now I'm mining at 50 or 60. So I really don't care. And you even mentioned, like, you probably know the price better than me. I don't look at the price. Like, I don't look at the price much at all unless there's something that I can't ignore. It just pops up on my Twitter feed because that's where most people are talking about Bitcoin. It's not something that bothers me day to day or changes how I make decisions. And that's one of the most beautiful things to me of getting people into mining, is it removes some of that fear, that psychological angst of getting washed away in price cycles and getting just knocked against the rocks by the waves of emotion and market psychology.
Absolutely love it. By the way, if you want to learn more about how to exit your Bitcoin, defer the capital gains taxes, and unlock what's called optimal timing, even to go into mining at this point, right? And diversify into some mining versus just holding the coin or going to real estate, you can go to capitalgainstaxsolutions.com. In fact, we wrote a book on it called Building a Capital Gains Tax Exit Plan. And we have cracked that code, and we want to encourage you, the Bitcoin never seller, to consider another option and diversify your timing of your Bitcoin. And or I even just think about, if I have 100 million, sitting in Bitcoin, and I can sell 25 and diversify it into the mining of the Bitcoin, right? So I'm still technically Bitcoin in that world, right? Or you could talk about IBIT and some ETFs for Bitcoin and what you think about that. I'd be interested to get your take on that. But it's like, opening up and diversifying. And I think the key here, I think what most people are after, what's called truly passive income, right? And truly passive income, I define, Beau, as no shoes, no shirt, no problem. You're Kenny Chesney sitting on the Oregon coast, just playing your guitar, and you have this cash flow that's just coming in, whether it be through Bitcoin mining, whether it be some real estate or something that you have certainty of conviction on, where emotionally you're not so tied because you know that the miners are going to continue to mine, or the real estate multifamily property or a mobile home park or industrial property or data center is going to continue to pay that cash flow. And it's 10, 20, 30, 40, 50,000 a month, whatever your number is. And it's consistent, it's durable. I have certainty of conviction on it. Then I have that number set, and then the rest of it can become like impact. Like, hey, how much more impact can I make for others or bless others? And it's a mindset and a practice of building cash flow. I think the Rich Dad Poor Dad, Robert Kiyosaki, I love it, but most people never get to that fourth quadrant, right? They're stuck in the upper right or that bottom left, and they're not really in passive income, which is why I love what you guys do. They're in active, right? And they're having to trade all of their time for these things. And they want truly passive income. And so our premise is this, that truly passive income is to your freedom and impact, as compounding interest is to your money. And that's what people really want, right? That's what they really want. The next thing I'll say is, a lot of people want to be in Bitcoin, but they have a business they want to sell. They have highly appreciated NVIDIA stock or Tesla stock, or they have a piece of real estate and they have massive capital gains taxes. The other cool part, and we actually did this with a client out of San Diego, $13 million car wash sale, $4 million basis. And this is about 4 years ago. And we sold, deferred his tax, got him out of debt. And guess where we went with a big piece of the capital? Into Bitcoin, right? In fact, 40,000 a coin was basically the strike price, right? And so we sold, deferred his tax on the real estate and invested into Bitcoin. And it's been a huge success for our clients. And so thinking through this, this is available and it's an option. And I think it's just something that most people just don't know about. Any thoughts on any of what I just said there, or feedback?
Man, I love that is something that you provided for someone, because you did him such a service by making that option available. And also, I mean, this conversation is really valuable for me because I didn't ever plan to give people tax advice. I still don't, by the way, just disclaimer. But didn't think of that being such an important part of what we do. But it's become so clear that that's a huge reason that people get into this. And I've got tools in my tool belt for active income and earned income out the wazoo. But I've got a couple clients who I'm actually going to make sure that I give them your book, because they came to me with exactly this: capital gains. They're not sure how to offset it, how to mitigate it. They want to get into mining. I didn't have the tools, because that's not my background, to solve that particular problem. So honestly, just grateful that you already live in the space and you've already thought through it. That's going to be super helpful to people that I already work with.
Thanks, Beau. Yeah, if people want to learn more, again, go to capitalgainstaxsolutions.com, capitalgainstaxsolutions.com. And if you want to learn more about Beau, go to abundantminds.com, abundantminds.com. By the way, right back at you. We haven't found and really explored a Bitcoin mining provider, right? And so this is great. This is a great opportunity for us to strategically align. We can talk more about it after the podcast for capital from exits, that are looking to diversify into Bitcoin in this active way. Active passive way, I guess, is a good way to think about it, right? So as promised, we talked about we're going to build a kind of a model right here, right? Just with Beau. Okay, so I got $1 million, right? I put it in there, and so I have a 10-year runway here, Beau, right? And I say, all right, what kind of LTV? You mentioned that, am I going 50% LTV? And maybe let's say it's your money, so you're not giving anyone advice, right? Let's say you had 10 million and you put it in there and you're mining it. What is some of your mindsets there? Are you 50% LTV or 30%, 70%, 30? Give me a little bit of that strategy. Walk me through what amount, if you're ever actually, it doesn't sound like you're ever selling, right? So I just want to give me a little bit of that framework that you've seen either yourself or others successfully execute within the buy the miners, get the passive, refi, rebuy, kind of give me that.
Yeah, so the LTV, I'll just leave on the side as it's something you can use to juice your returns or restart your depreciation schedule or scale a little bit faster. But in the more general mindset, when you're not taking leverage, these machines are generally a 5-year asset. This is an ever evolving network where the difficulty, the competitiveness of the Bitcoin mining economics is ever increasing. So you've got to think not just how much Bitcoin am I making, but kind of like what's the lifespan of this investment? And you've got both the economic life of a machine and the physical life. And those are usually two different numbers. So when people come and start working with us, the easy model is buy a machine or buy 100 machines or 1,000 machines, let it run until it's dead or it no longer makes sense to run, and then recycle it. But what I like to encourage people to do is think of this like its own portfolio, especially when you're looking at the options world, and Bitcoin mining can be characterized kind of like a call option on Bitcoin. You've usually got different layers of options at different strike prices, different risk levels, different timelines, and mining is much the same. So you might have a $10 million allocation that you are planning to deploy over the course of 2 to 5 years rather than all at once. Or even if you do deploy it all at once, you're probably going to want to sweep some of those cash flows into upgrading your efficiency of those units, kind of trading them out for one that's a little bit more current to the market every couple of years. So we've seen an increase in overall returns between 10 and 25% over that 5 to 10 year lifespan of an investment, which is already a pretty high multiple on capital historically, just by every 2 years taking 30 to 50% of your fleet, recycling it for the next highest efficiency machine, and making sure that you're keeping up with the times. And that way you've got the best balance of efficiency, of overall computing power. You're getting the most of those machines while they're in the prime of their lifespan. And then you're also recycling them while they still have a good bit of residual value. So it brings a little bit of extra complexity, but I like to, prime people that this is passive in terms of operation, but it is like an actively managed portfolio when you're doing it right.
Okay, that was very helpful. A couple of the follow-up questions on that. So at the end of the 5 years, when I took, I took 100% bonus depreciation on that, and the machine is no longer, it's past its useful economic and physical life. Do I get recaptured at that point? Walk me through that.
You would get recaptured, assuming that you aren't taking those proceeds and rolling it into something else that is also 100% bonus depreciation.
Right. And by the way, multifamily works the same way, right? You can do these multiple 1031 exchanges, defer the taxes. Then if you sell and you get out of the game, it's going to get recaptured, right? And so it is in a sense a deferral mechanism for this. And the more you buy, the more you have a new 3 to 5 year, and that's what Beau is referring to stagger this over the course of time. It's almost like dollar cost averaging within the bonus depreciation world, so that you're always ideally having enough tax flow depreciation to offset your cash flow or capital gains. Is that a fair summary, Beau?
Exactly. When you're getting into mining, there's two primary reasons that you're looking at it. One is exactly what we've been talking about: depreciation, tax offsets, deferrals, whatever you can do to keep more of your money. and still get a Bitcoin position. And when it's done right, when you've got a great operator, when you've got good energy costs, when it's in a good climate and it lasts for a long time, you can outperform or get more Bitcoin for the same capital outlay. So those are the two primary reasons that people are doing this. And when done right, you can accomplish both goals. But just like any worthy wealth strategy usually takes some discipline, some intellect, planning. It's not easy street, apart from, it's very easy to set up. It's very easy to collect the income, but strategy is where the money's made.
Okay, awesome. We're going to go to lightning round here in a second, but I want to mention one other thing for anyone who's listening to this. As it pertains to the death tax and the estate tax, we've been mostly focusing on income tax and capital gains tax. The big beautiful bill was passed, and now it's 30 million per married couple, 15 million single as the exemption amounts. But above and beyond this, you may or may not know this, but you have what's called an estate tax issue if you're worth more than that. And we have a solution. Let's say you're worth 130 million worth of Bitcoin, right? And something happens to you, and it's all inside of your taxable estate. They're going to crush you with a $40 million tax bill. Right, estate tax bill. A stepped up basis is not solved for this. You need a solution to eliminate that estate tax. Guess what? We have that solution. You can sell that $130 million worth of Bitcoin into our structure and eliminate the estate tax. And guess what? Turn around and go buy more Bitcoin. And the growth of that can be outside of your taxable estate. And so just keep in mind that what we've been talking about are more like the tiger by the tail, cap gains and income tax deferral. But the big elephant in the room for the Bitcoin billionaire or 100 millionaire Bitcoiner, or really anyone who's worth more than $30 million net worth, is also the death tax. It's the government's biggest mousetrap. Make sure you don't get caught. Go to capitalgainstaxresearch.com. It's capitalgainstaxresearch.com. All right, that being said, Beau, you ready for the lightning round?
Let's do it.
All right. If you go back to your 20-year-old self, besides buying all the Bitcoin you could, what's the one gold nugget make sure to tell yourself to do?
Build long-term things with long-term people. Focus further out than you can see.
Excellent. What is your number one takeaway from the Dan Martell Buy Back Your Time book?
If you want to 10x your results, 80% of your calendar is going to have to be different within the next 12 months.
Love that. What is the number one way that you say you stay ultra disciplined and super healthy?
I think the meta is just spending time quiet and in meditation. If I give myself that space, every other decision becomes easy and effortless.
Excellent. Next question. Number one leadership quote or theme that you strive to live by?
Be the example. Nobody's going to listen to you if you don't listen to yourself.
Okay. Yep. Excellent. Next thing, number one way you're using ChatGPT or any other AI?
Oh man, ChatGPT, honestly, biggest tool on a daily basis that helps me multiply. I will say sequencing. I give it my current context and ask it to tell me what to do next. What's the next right book to read? What's the next right problem to solve?
Give us an example.
So in the CEO journey, building a company, you've got to obviously learn many different skills, become a different person at different stages of the company. I feed it my context of the current challenges, bottlenecks, scaling issues, biggest opportunities, and then tell it to give me a recommendation of the best resource to go and solve the next stage of basically get ahead of where I currently am so that I never am letting a bottleneck stop me from accelerating.
Okay, I love it. Great example. Next question. Number one leadership quote or theme that you strive to live by. Did you already say this one?
Yeah, be the example.
Okay, yeah, you said that. Okay. All right. That's it. I think we're going to wrap it up with the very last question here. How do you best stay in a mindset of stewardship over ownership after you've accomplished so much? What's something that helps you to stay in that mindset?
I remember that this isn't all about me, that I'm building data centers, infrastructure, projects in communities that, if done well, are going to outlive me, and they're going to have impacts far beyond my lifetime. So I just remember that there's people that will be affected by my choices that I will never know.
Amazing. Beau Turner, you've been absolutely amazing. It's been 40 minutes of just pure gold here, bit mining gold and strategy. I want to thank you for doing what you're doing. And I want to encourage you to keep helping people build passive wealth and semi-active wealth. And with depreciation, it's kind of the best of both worlds, to be honest, within the Bitcoin world. For our listeners who want to get in touch with you, one last time, what's the best place for them to find you?
Easiest way to get with me or someone in the company is abundantminds.com. You can also find us on pretty much every social network with the handle @abundantminds. Ton of free education on our YouTube channel, podcasts, long form videos, everything you could imagine. And feel free to DM us as well. We're always happy to chat.
Awesome. Thank you, Beau Turner. Also, thank you to everyone who listened or watching this and consuming it on the Built to Billions podcast or Capital Gains Tax Resistance podcast and YouTube channels. Hey, we're on this journey with you to scale from millions to billions so we can get more all the way to help MVPs, the most vulnerable people. Take action today. If you know someone in Bitcoin or someone who's going to exit a highly appreciated asset, share this with them so that they can have these secrets and insights to either defer the tax on the exit or to multiply their wealth as they get into the Bitcoin mining space. Appreciate everyone listening today, and we will talk to you again real soon. Bye now.